Hello and happy Thanksgiving to everyone. Today's November 28th, 2019. We'll go over our calls. We looked for the pattern with the early low. This is it. Tends to be a rally day with a high in the final hour. Friday's pattern has the early high, tends to be a positive day, but failure is a straight line drop. We had resistance at 31.50. We traded about 4 points higher. That's about 1/10 of 1%. It doesn't change anything. There's still resistance here. It doesn't mean resistance because it's going to hold. Here's what we had. Tends to be a positive day. High in the final hour. 4 points at this level doesn't mean anything to me. We have a new target, 31.50.51. And unless we gap up smartly on Friday, that's my call. Here's the MEJT indicators. Says this rally's false. It'll come down under this line. You have a MEJT plus 3 sell signal. Doesn't mean you won't trade slightly higher first. It isn't as accurate as the rest of the system, but it's usually good for a few points. Well, here's the daily chart. Please note that we're hugging the upper Bollinger Band. It's really hard to get much past that and keep it. Doesn't mean you won't keep hugging it as we go up. Just means you're not going to get a huge rally in a straight line from this point. We have recycled the stuff, but for people who like to mark counts, when it recycles in the beginning, it's not. Sometimes you get bar 13, which should print on Friday, of a combo in a combo sell to go along with the sequential sell, which mark areas of tops. These just have not worked after working since the 70s, I guess, but I don't trade based on the signals. I just like to keep track of what they are. More important to me is the Bollinger Bands. And you'll see we're hugging the upper Bollinger Band on the weekly as well as on the daily. It's going to restrain advances. Doesn't mean you won't keep hugging it. And the same thing, we're actually over it on the monthly. It's just tough to go much beyond the Bollinger Bands on all these charts. Doesn't mean you won't keep on hugging it. Just don't look for straight line moves up. Well, here's how we're counting this. Of course, this isn't the only count. For example, this 2 could be here. If this is the right count, then when the inevitable drop comes, you don't have much to fall. Just about 100 points, 100 something. It's not more than about 3-4%. It isn't the end of the world. But if this is round 2, you could drop more than that. I'm not predicting either at this time, but if we do drop from here, it could be significant. Well, here's a plausible pattern. We still have a fib target of the prior consolidation. It's possible to read this as a rising wedge, a breakdown, and a return to the apex. It's not the only way to read this. And what the bulls need to do is to keep advancing from this point, because if this is the right interpretation and we do start dropping, the target's to return to the base. Seems kind of hard to believe at this point, but it seemed hard to believe 2 months ago when we were down here we'd rally this much. So what the bulls need to do is to keep advancing. Now my stuff is based more on price than on time. But there are a number of timing systems of other people which are coming into play in this area. So let's just talk about one of them. One is there's a well-known 55-day cycle from highs to lows. So we have 55 days from this low to this high. This is a Fibonacci number that the market likes. It doesn't mean every time there's 55 days you're going to switch, but it's a common length for a trend to last. So you have to know there's some time resistance in addition to Fibonacci resistance. Doesn't mean it has to hold, but if it drops, you have something saying it's a time to be alert. Now, what's interesting about that is if you look at 55 weeks, you've also got a nice Fibonacci target, and it's right from this high to this high. And to further drive the point home, this is only 54 months from what was then the all-time high in 2015. 54 months isn't 55, but it's within a few points or a few days of being 55. So you have this number the market likes all lined up in different time frames. Until there's a reversal, I'm not saying anything. I'm just saying this is a time which is compatible with a reversal taking place, and if it happens, at least you can explain it after the fact. So what the bulls have to do to invalidate this is to keep rallying. And if they don't, there could be a short-term top. Well, here's what I have. Now, all this is conditioned on the fact that we have a shortened session Friday. You might have to wait until Monday. A lot of times you get these stub sessions and nothing happens. But Friday's pattern has the early high. It tends to be positive. If you fail, it's a straight line drop. Don't forget, if there's a straight line drop here, it lends credence to the interpretation of a rising wedge, which is negative, but it won't convince me until we undercut some prior lows. Breadth has improved dramatically on this rally. The long-term picture is quite positive. Much higher prices are coming. Short term, there's a slightly lower target. Unless you gap up sharply, I think it'll print. It's possible to read the current advance as a rising wedge, a breakdown, and return to the apex. It's negative, and bulls need to continue their rally promptly to invalidate that interpretation. The volatility indices are hugging their lower Bollinger Bands. There's no signal unless they reverse higher, which they'll do if prices drop. But if there is a reversal, it indicates the end of the leg. These are sentiment indicators. It indicates the price premium people are willing to pay for puts. And when they're not willing to pay for puts, that's really when they should be accumulating them. Daily, weekly, and monthly averages are hugging the upper bands. It should temper advances. There's no signal till we reverse. A number of timing systems of other people have come into play. If we drop from this level, I think it could be significant, but not disastrous. So I have a lower target. Everything might be put on hold until Monday. Might be, but doesn't have to be. We have resistance here. It doesn't have to hold, but if we start dropping, I think it's possible after the fact to give an explanation for it. Till that happens, until we undercut some prior lows, the trend's remaining up. Just be aware this is a resistance area. Early high doesn't mean you won't gap down first. Happy Thanksgiving to all. That's today's call.